Hey, it's Monday. Welcome back, traders. D7 here with freetradingvideos.com. Today for the day traders, it's been a turbulent day. We were out of the gates very strong at the beginning of the day, and then big sell-offs throughout the day with a pretty strong little finish at the close. But anyway, we got this big pop because China jumped on board. Their $500 billion bailout plan was announced. So that got everybody all giddy and happy, and everybody was going up, including the good old US of A. But it didn't last long. It just shows that the bear sentiment still lingers. And now this is what I want to draw special attention to. Let's blow this up. All right, this is the S&P daily. We said we had a bullish Harami reversal pattern underneath the 20-day moving average. And that's what we had going into the weekend. I was looking for a close higher than this and preferably higher than the 20-day moving average. And then that would have been certain that we would have smacked our head right there and maybe even higher. How did I come up with this line? You just go back a little bit, scrunch it a little bit, and you can see those resistance areas right here. And that's how I came up with that. Now, the bulls had their shot. The bulls, when we opened up a little bit. See this gap up right there? We opened up right at the 20-day, and then we shot up. The bulls had their chance. If it was going to go, it should have happened first thing this morning. But then we come down. At one point, we even went lower than this support line that we have going on. That was a little surprising to see, and that would have been very bearish. But then we closed back up. Now, we're in the same boat as we were in last Friday. Look at this. We're underneath the 20-day moving average, but above a support level. Listen, this to me is more bearish than bullish, but we still are within this support area. Now, this is what's key. If we break down below this 900, especially we get down below 994 or lower, that could spell some real bad news for the markets. Boom, head right down to 850 really fast, and 850 should break down to 800 really fast. Listen, if we break below 800, game over. Wow, bad things could happen. Now, but what I'm foreseeing that should happen in the next 6 months until next June is a big choppy mess just taking place. We're going to be all over the place when you look at the big picture, and I just see us chopping all over the place. Boom, just all over. So just be really careful here in the markets. And if you're in the markets holding long term, make sure you have got yourself protected, with a, getting into like a protective put, for example, if you have some long positions in stocks or options, or in stocks or ETFs. And if you're holding long term short, to the short side, make sure you also have some calls going against them. And just protect yourself. And always make sure your stop loss is in play. So we'll just continue to watch. Today was kind of a worthless day. Didn't tell us too much. So we'll just continue our research. And anytime you have down days and nothing's happening and you're sitting on your hands, don't let that time go to waste. Use that to study. Use that to research. If you can't identify those patterns just by looking at them visually that you find at the chart school here at freetradingvideos.com, if you can't identify them individually and by themselves without any help, then you're not as where you need to be in your education. So what I would recommend that you do is get in there, study those, and not just study those, but learn them. Learn them, where if you were to take a quiz, you would ace it, because those are your buying opportunities or your selling short opportunities. Those patterns bring probabilities into your corner, so that's what you need to have. Do not pull the trigger on setups that aren't setups. Don't make them up. Don't think that you know better than a zillion other people in history. It's, what you want to do is stay on track, stacking as many odds as humanly possible into your corner. When you pull the trigger, that you don't know if it's going to be a winning trade or a losing trade. No one does. But what we do know is that you have odds stacked in your favor. How do we know that? Because the rules that you have put in place are odd stacking rules, such as buying a breakout on a symmetrical triangle or an ascending triangle, a descending triangle, a breakout on a falling wedge or a rising wedge. That you have a setup that you're playing. Identify that setup, know what that setup is, have your entry rules in place, pull the trigger when they all line up. So there you have it. Until next time, we'll catch you at freetradingvideos.com.